I'm Chris Preston.
I'm Madison Robertson.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, regardless of which two people are doing it. As you can clearly tell, Brad is not here this week. He's on his European vacation. What could go wrong there? Um, and so I've asked Madison Robertson, our producer, to join me, at least at the top, to help me kick things off here. We usually like to have a little banter at the top, and that's probably not Brad's favorite part, but Madison, I think you specialize in banter, so I asked you to come up with a couple topics at the top
I
just to
love
help me get
banter.
started. One non-investment related and one investment related before I get
Hmm.
into everything. And by the way, we are also going to have on Clif Droke, frequent Street Check guest. He will be joining us later to talk market tariffs, healthcare stocks, a bunch of other topics. But first, Madison, what'd you come up with?
I've been stuck. Actually, you came up with it. I've been stuck on this Tom Cruise topic. So yesterday, when we were talking about me coming on, Chris had thrown all of the celebrity gossip out there, which I was really impressed by. But the one that stuck with me was Tom Cruise and how he does all of his own stunts. And
That's
today, I learned that he has a middle tooth. Have you heard about this?
what? Middle
Yeah.
juice?
Yeah, I told my husband I was coming on here, and he's like, "What are you doing on a stock market podcast?" And I said, "Talking about Tom Cruise, probably." And he
Tom
said,
Cruise is
"Oh,
universal. Everyone knows. Everyone knows Tom.
every."
Yeah.
And Sam was like, "Well, are you going to talk about his middle tooth?" And so I had to Google that. You've got to Google it. He has one tooth that's in the middle of his.
Really?
Yep, you got to look at
I've
that.
never noticed because he's always
So
smiling. I'm surprised I've never noticed this.
just a quick little Google search is the first thing that comes up. I went to go type in Tom Cruise and then MI. So obviously Mission Impossible comes up first, and then Middle Tooth comes up right
Really?
after Mission Impossible. So there's your
Wow.
celebrity fun fact for the day.
Yeah, and Tom Cruise is in the news because Mission Impossible just came out. I think it's maybe the last Mission Impossible, and
What they
I
say.
had mentioned, we could talk about Tom Cruise trying to kill himself on every single set these days because he does all his own stunts, including like holding onto the sides of planes and motorcycles off of cliffs and things. He will die on set one day, and I think
He
he wants
will.
it that way. So I wonder if the middle tooth, if he knocked out some teeth, and that
I don't it seemed like
that's
he was
what's left of his front teeth, and they just sort of built around it. Who knows?
maybe could
Yeah.
be. Have you seen any of the clips of him doing his own stunts?
It's been a while, not from the new one. I heard like the last couple sequences are wild, and it's hard to even believe that I heard some podcast talking about like what's the insurance on a Tom Cruise
Yeah.
movie? Who? I think there's something about he said the insurers wouldn't sign off on some stunt he was doing in one of the Mission Impossible movies, and oh, it was like an interview with like
Really?
Matt Damon, and Matt Damon was like, "Oh, so you couldn't do it?" He's like, "No, I found new insurance people." And so
That's
we
funny, but
fired.
I mean, that's the caliber of the stuff he's doing.
Right.
I was getting a lot of little reels and videos and stuff leading up to this Mission Impossible release. I don't know why. I just like the behind the scenes stuff of any movie, but
Yeah.
this one in particular, I mean, he like takes a motorcycle like up off a ramp that goes off a cliff,
Yeah.
and they have to just catch him. And they have a camera on all the people in Studio City just watching the camera, holding their breath, freaking
Wow.
out. What an intense movie that would be to work on.
Yeah. Yeah. Now I gotta see it. Okay. And then you came up with an investment question too, right?
Yeah. Okay. So you guys know that we have been renting and we're kind of just waiting out the market to
Mhm.
get a house. It's looking like we're going to just rent again for another
Yep.
year and wait it out. However, I'm tired of waiting.
Right.
So, what would be is this some good quality stocks that would give us some cash
Oh man.
fast?
Um, cash fast. I mean, that's, as everyone who comes on here always says, crystal ball is broken, but it's my job to pick stocks. My favorite stock that I've been saying over and over the last 2 years, and it finally is really paying off this year. It had a good year last year, but it's really taken off this year is BYD. The ticker symbol is BYDDY. It's a Chinese um, electric vehicle company that is now selling more electric vehicles globally than Tesla, or at least it did in April and I believe in the first quarter too. Um, they do 90% or have done 90% of their business in China, but are now expanding globally. I think they outsold Tesla in Europe for the first time ever in April, and they're going to South America too. They're going to Southeast Asia, and
Okay.
they was this is actually helping them now. They don't sell in the American market, which is probably why you've never heard of them, or a lot of people haven't heard of them. That's a good thing in the tariff era with U.S.-China tariffs, so
Yeah.
not going to get tariffed. Stock's up 45% year to date, 79% in the last year, and I think it's just scratching the surface. I think this could be basically China's version of Tesla 10 years ago. Um,
Which, as we know in your portfolio, didn't Tim put that in the stock of the week portfolio
yeah. Yeah. So it's
early on?
Tesla. It was 2000, December 2011. Tim Lutz, my predecessor in Stock of the Week, recommended on Mike Santolo's initial recommendation, Tesla. And it's up like more than 20,000% since then. Now, I'm not saying BYD will be up.
So you're guaranteeing that we're going
Yeah.
to head into a
Yeah.
Tesla situation.
Right. Yeah. I'm
Great.
not saying it'll be up 20,000% in the next 14 years, but if it could be, I think there's a top possibility to be maybe a quarter of that. I mean, that's even a big ask, but I think it'll be up a lot.
But it
And
could be.
it's
Okay.
already one of the best performing stocks in the Stock of the Week portfolio. So that's one. Trying to give one that's not in one of my portfolios that I really like. Um, Let me think here. Well, actually, no, we've already mentioned this one. Dutch Bros, which you're familiar
Oh
with.
yeah. Oh
Yeah,
yeah. And you know
yeah,
I already give all of my money to any
right.
caffeine establishment, so mine as well.
Yeah, I mean, turns out people want drive-through coffee. I mean, I guess does Starbucks some Starbucks have drive-through, right?
Most, I think most.
Most, yeah. They,
Yeah.
in Vermont they don't for some reason. But
Oh no.
yeah, but I don't know. I guess it sounds like Dutch Bros coffee and other drinks is pretty popular. And so now they are finally going to release a food menu at some
Oh,
point. And they're already up to over 1,000 locations in 18 states, and they're
I
aiming to
didn't
get
know
to
that.
7,000 in the next 10 years. Stock's up 35% year to date, almost doubled in the last year. So that's another one. Bros is the ticker symbol. So I'd say those two,
Hmm.
BYDDY and
Okay.
Bros.
Okay.
So
I'll
yeah,
keep
what's your
that in
timetable?
mind.
You're hoping to get rich in the next month, you said?
Yeah, at least
Yeah.
I 2 weeks, 2, 3 weeks.
Two,
I
three
guess I could
weeks.
I guess I could wait a month, but yeah, 2 weeks.
Okay. All right. Well, yeah. Hopefully,
And my
we'll check
beloved
in on these. We'll
SC.
check in on these end of June and see just
Okay.
you know, how much money I've made you.
I mean,
Um,
I'll be buying my man. I'll be filming this from my mansion by
right.
then.
Yeah, exactly. Yeah. If this pays off for you, if these pay off for you, that'll price you out of this podcast, and we won't probably want to do it again. Good question. Well, thanks, Madison, for helping me get things started here. And I will shift to what's going on in the market. But good question. Thank you. All right. So the market it's in a holding pattern now. It's been pretty stagnant for really the last 3 weeks. It got off to a great start first couple weeks of May. But since May 12th, it's basically been in the S&P has been in the 5,800 to 5,900 range. Topped out a couple weeks ago at, let's see what we have here. Topped out at on a closing basis 59.63. That was on May 19th. Hasn't gotten close to topping that since. It's right around 5,900 as we record this. I think part of that's to be expected, after a fairly big run up. Granted, the run up was from a big plummet down, and we're essentially at equilibrium. Not quite. We're still down from the February highs. Um, but we've recovered a lot, and recovered all of the April losses. Before Liberation Day, S&P was at high 5,700 range, and we're now at 5,900. So that's good. If you had said, when the market fell below 5,000 on April 8th, so, less than 2 months ago, if you had said we're going to be up almost 1,000 points from here next couple of months, given how dire everything looked with tariffs and with all the uncertainty and volatility, you'd have taken it. A number of there's a survey of Wall Street analysts. I think it's a few dozen. It's like 50 some Wall Street analysts. Um, where they think the market will be by the end of the year. And the consensus was, I mean, not everyone, but I guess the average was or right around 5,900. So where we are now, so flat, which would be flat both for from here and for the year. I mean, we're essentially flat for the year right now. And that's not that surprising given that we were up 20% in each of the last 2 years in the indexes. But I think there's plenty of opportunities to make money even in a flat market. I've seen that and just mentioned two stocks that are in my advisories, BYD and Dutch Bros. There's plenty more that are both my stock of the week and Cabot Value Investor newsletters. We have plenty of other stocks that are flourishing. That's why, it's the advantage of having a good analyst, like as we do at Cabot. And I mentioned one of them is going to join me here in a bit, Clif Droke. Um, so it's, what they call a stock pickers market. While the market might not be a rising tide that lifts all boats, where everything goes up or most things go up the rest of the year, there's still plenty of great companies, great stocks out there that you can make really good money on. So, and again, this is just a prediction. Wall Street analysts get things wrong all the time. So it could be higher. That doesn't mean it's going to be flat the rest of the year. There's just so much uncertainty right now with tariffs and everything. But speaking of tariffs, big ruling this week, which I'm going to talk to Cliff about. Uh, Obviously, the Trump has been trying to institute, even though everything's a 90-day pause right now, has been trying to institute these tariffs on, I think, 130, 140 nations, basically the world. And um, right now, the big news this week was that a federal court ruled that the tariffs are illegal and the president does not have the authority to impose tariffs, which must typically be approved by Congress, based on the legislation cited. This, of course, has already been appealed. This isn't the last we're going to hear of tariffs. That's not the end all be all. Maybe it'll get to the Supreme Court. Who knows? I think the point is that you know, you don't need to hang on every bit of tariff news that maybe you needed to or people were. The market was the first few months of Trump's presidency, peaking, or I guess maybe peaking is the wrong word, but spiking in early April after Liberation Day. Um, and it's clear that the market is maybe both fatigued by tariffs, but also not surprised by any tariff news anymore. The market even after this ruling, it didn't soar higher. It was up a little, but it's sort of been stagnant. Now, Cliff, I know, wrote this. He thinks this is really big news, and I want to ask him about that in just a few minutes. No, I don't want to dismiss the ruling, but I don't think you can just say, well, it's a smooth sailing from here because of this ruling. We're going to hear more from tariffs, and even today there's escalating tensions again with China. I don't know exactly what that's all about, but there will continue to be um, trade tensions with China. Trump, said China totally violated a trade agreement, so there'll be continue to be rhetoric there. Volatility remains down, way down from what it was in April. It's below 20. Cliff actually came on here a month ago and said the magic The magic number was 25. Anything below 25 in the VIX is typically, um, not necessarily an all clear, but it makes for a healthy market. And he's been right. It dipped below 25 a few weeks ago, and the market has been mostly healthy, even if it's been sort of stagnant lately. Where the market goes from here, anybody's guess. We could have. I doubt we'll get a retest of April lows. I mean, again, that was a thousand in the S&P. That was 1,000 points lower than it is now. Um, but I could see a pullback of 5% or so. Eventually, after tight or narrow trading ranges like we have now, there is a breakout one way or the other. Question is which way, and what'll be the catalyst. Tariffs seem to not be moving the needle as much now as they were in either direction. Earnings season is over, so what will and summer is almost here. June, it's almost June, so um, there could be another few weeks of sort of flat, um, flat direction in the market. But I think a breakout will come one way or the other. Ultimately, I don't think either of the extreme situations, new lows or even testing those April lows, will happen. And I also don't think we're going to take off from here. Rise, to new all-time highs and just keep going and never look back the way we have after previous recoveries during this bull market. So we'll see. But like I said, plenty of good stocks still out there, and plenty of good sectors, which Cliff is going to talk about one of them. Um, One other thing, we talked about how there's always a bull market somewhere, including here in the US, technically still, even though it came close to losing it in the S&P, he did lose it in the NASDAQ and in small caps briefly. But overseas outperformance continues. The Hang Seng, China's index is up 16% year to date. European stocks up 8% year to date. And as Carl Delfeld, my colleague and Cabot Explorer chief analyst, wrote this week, he's been talking about the great rebalancing in the global market as money there's there's just too much money in the U.S. market, and it's going to start flowing to other markets. Well, that's happening so far this year. Poland's market is up 47.6% year to date. Austria's 34%. Greece 33%. Spain 32.5%. Chile 30%. Colombia 30%. Italy 28%. Just for as an example, Crawler wrote, why Poland? Poland is now one of the cheapest European plays, boosted by monetary tailwinds and manufacturing momentum. Poland's skilled labor, infrastructure, and location make it a nearshoring manufacturing center and a hedge on China risk. The country has become a key NATO member in a fractured Europe. That's sort of example, European stocks as a whole have, as we talked about, have outperformed this year. As I mentioned, up 8%. And we're seeing that in just these individual markets: Poland, Austria, Greece, Spain, and Italy, all up 28% or more year to date. So it's a good time to look overseas if you're looking for outperformance. But there's still plenty of good stocks right here in the U.S. that should do well for the rest of the year, even in a flat market. Okay, before we bring on Cliff, wanted to mention our offer for today. If you go to cabotwealth.com/street, we are offering Cabot Money Club, which is a monthly service run by our Nancy Zambell, who's been in the business for a couple decades. Has been on here a bunch, a great guest of Street Check. It is a monthly service that has usually a sort of a theme that features or Nancy does sort of a deep dive on an aspect of the market. She's really good at this. And it also has several portfolios, including an ETF portfolio, and it includes something called Stock of the Month. I run Stock of the Week. Hers is Stock of the Month, which is also draws from all our other Cabot advisories. And we're offering that today for just $49 for the year. Less than $50 for the year, 75% off the normal price. So that is less than $5 per month, if my math is right. So like a cup of coffee a month, basically, a cup of Dutch Bros coffee. Actually, that's probably more expensive. But again, if you go to cabotwealth.com/street, you can get 75% off our normal price on Cabot Money Club, $49 for the year. I think you'll probably make that money back if you subscribe. Okay, I'll take a quick break and then I'm going to welcome on Clif Droke. All right, welcome on Clif Droke, Chief Analyst of Cabot Turnaround Letter, gold and silver metals expert, and a frequent Street Check guest. Clif, thanks for joining us. I know you're here fairly recently, but we got to fill the Brad void somehow. I don't think I'm enough, so thanks for joining.
My
Um,
pleasure.
so you had an update that just went out today. You talked about a couple interesting things that I wanted to hit on. Namely, you spoke about the tariff ruling from this week from federal judge. You wrote the stock market received arguably its biggest catalyst of the year on Wednesday on the tariff front. A federal court ruled that the White House's tariffs were illegal and that the president did not have the authority to impose tariffs, which must typically be approved by Congress based on the legislation cited. The news brought massive relief to financial markets, resulting in a strengthening U.S. dollar index and an overnight rally across equity markets worldwide. Tell me, just expand a little more on why you think this is the biggest catalyst to date so far, because the tariff news changes so quickly day to day uh, in this Trumpy world. Talk about why you think this one might have a little more staying power.
Well, it was the biggest catalyst for about 12 hours
Right.
before the. uh, it's showing, if nothing else, that Trump's tariffs are being seriously challenged,
Right.
and there is some serious concerted pushback at this point. I believe the market, to a large extent, has already baked in the worst case scenario, and I'm not terribly worried about it one way or the other, regardless of whether they. I think at some point there's going to have to be some concession, and Trump they'll roll back, I believe, some of them, probably not all of them. Uh, it's not a catalyst right now, but I think it will be down the line when finally we get some resolve. It's going to be an overhang for stocks like aluminum, steel, auto to a certain extent.
Right.
But
Yeah, those were exempt. I think you noted that those are not included in the ruling.
right,
Yeah.
but there's obviously the market is looking beyond that, and there's considerable opportunity out there in a number of sectors, even with the tariffs right now.
Yeah, I was talking about that. It's maybe, a bit of a stock pickers, or maybe even sector pickers market right now. I wrote earlier this week about, and I mentioned earlier on here that there was a survey that they do periodically among like 50 Wall Street analysts where they think the market will be through the rest of the year. And the consensus or the average was flat, basically like 5,900 range where we are now in the S&P. But that also doesn't mean you can't make money in this market. And you have identified a sector that is poised for a turnaround, and I think is already turning around. And that I believe is healthcare stocks, right?
That is correct. I see some marvelous opportunity in healthcare, particularly in biopharma. It was first brought to my attention by a colleague of mine, Jason Gephardt. I'm sure many of your listeners are aware of him. He pointed out that when the healthcare sector ETF, symbol XLV, recently hit a new 52-week low, and then rebounded in short order. This is only like the fifth time historically this has happened. And whenever this has happened, you get a 100% of the time a rally in XL, in the healthcare stocks on a 1, 3, 6 month basis, and then 75% of the time on a 12-month basis. So there's an excellent chance just based on that historical pattern alone. And given how really terribly oversold the healthcare sector is categorically, I think it's in a prime condition. And on top of which, there's a lot of negative sentiment, a lot of buildup, short interest. I think the sentiment is too negative on healthcare right now, which will, from a contrarian perspective, I think will bode well. And I'm starting to see some of the biopharma stocks perking up even now, and that's where I expect the initial strength to come from in that sector.
Yeah, I mean, 100%, up 100% for, what do you say, 3, 6, 9 months? Those are good odds.
Yeah,
So, I mean, what the reasons behind healthcare being sold off didn't really have to do with the companies themselves. A lot of it was, we're in sort of the tariff slash um, reducing drug price crosshairs, cutting out middlemen, which, Trump has been on that. It was a lot of news driven, mostly was the reason they were down, mostly, right?
that's right. I think it was just overreaction.
Yeah,
And like you say, it was not fundamental. And actually, we should be seeing strength theoretically in that sector, given the defensive nature of it, and
right.
given that tariffs remain a concern. And the I was looking this morning at I wish I had brought it with me to show the audience a chart going back 100 years. Yeah, it was an economic expectations chart, and it hit an all-time high just like in the last couple of weeks, like a 100-year high. People are extremely worried. It even exceeded the COVID era spike, or the 1987 stock market crash spike. People are just enormously worried, and that
Yeah.
you got to feel from it. And every time that has happened, by the way, again, statistically, you get a pretty good rally in the stock market. It spring loads the market because people just get too bearish.
Right. Yeah, and we're talking about that a few weeks ago, and we have, seen an up May. Things have stagnated here the last couple of weeks, but that's after S&P was up like 6% or so in the first couple of weeks of the month. Nasdaq up around 9%. So we're seeing sort of a normal pause after the recovery. I mean, we're higher. S&P at least is higher than it was pre-Liberation Day in late March. Not quite back to February highs, but it's been an impressive recovery. So it seems like the pause now is pretty normal. So yeah, there might be sort of a delayed effect with the tariff ruling and sort of a wait and see. But I think it was almost encouraging that there hasn't been a whole lot of overreaction in either way to the tariff back and forth, ruling and appeal in the last 24 hours. Seems like tariffs are almost priced in. I mean, there could also always be some surprises, but there isn't the shock value with tariffs anymore. And while it's still an overhang on the market, it does seem like they're sort of a known thing, and the market knows how to react to them now.
I think so. It could be a classic case of sell the rumor, buy the news, or vice
Yeah,
versa.
right. Yeah,
Uh, but I'm pretty sure that the market has assimilated most of the possible outcomes. It's had I don't know how many months already, but to me, there's no question the market is looking beyond tariffs.
right. Yeah, and that's a good place to be. So one of the beneficiaries of all the uncertainty the last few months has been gold. Gold prices reached all-time highs. Did it get above what, 3,400 an ounce higher?
It got, I think, around 3,400 the last I
3,400.
checked.
Yeah. That's sort of pulled in a little bit lately. Let's see where gold is right now. Maybe you know it off the top of your head. I'll pull it up. 3,300. So not
Okay.
not down, not down that much. One, do you think, because the market's in a little healthier place, do you think gold will lose much value as a safe haven, or do you think there are enough factors still in place for gold prices and gold stocks to continue to rise higher?
There, under normal circumstances, gold should actually probably have topped out by now, but these are not normal times.
Right.
I think gold has got a built-in series of catalysts that, dare I say, I don't want to come off as a super bull here, but I think it's got a clear path to 4,000 this year, and that's being somewhat conservative. There's just central bank buying is very strong. Retail demand, institutional demand is strong. Um, the safe haven demand is off the charts, and
Yeah.
reasonably so. So I I don't see gold pulling back significantly anytime soon. Um, I think it's in a bull market. What else can you say?
Yeah. Yeah, and that's sort of a rarity where both stocks and gold are kind of in a bull market. Both on pause a little bit right now, but yeah, I mean, all time pulling. You'd think the pullback in gold would have been more pronounced from 3,400, and to be just $100 less than that is not, not much of a change. Um, and then so silver has not had the same performance as gold. $33 an ounce now, up 14% year to date, but only a little over 5% in the last year, whereas gold is up way more than that. And silver is not at all-time highs. And it also just hit the gold silver ratio just hit a rare disparity. Talk about that and why that makes for a potential, lots of upside in silver right now.
Silver hit this gold silver ratio, which measures the amount of silver you can buy relative to gold, hit a multi-year. In fact, I believe it was a multi-decade high
Right.
just in the last month or so. And whenever that has happened historically, you get a big rally in the silver stocks, the blue chips type silver mining stocks. Some of them have been known to double when this has happened in the past. And of course, silver itself eventually goes up. The problem is it's not a pinpoint timing indicator. You don't know when the rally is going to start, but
Right.
it happens. The scenario, the dynamic that we're in right now reminds me of what we saw in the years heading into the credit crisis. And I'm not trying to say we're heading into another credit crisis, but you mentioned a minute ago stocks and gold going up in unison. That typically happens in this type of environment where people are just inordinately worried about the economy, and or about certain aspects of the financial market. And it is possible that you can have gold, silver, and stocks going up together, even for years at a time. So it's not without precedent that we're seeing this.
Yeah, silver topped out in 2011, just under $50 an ounce. It's now, like I said, $33. So that's a far cry from gold, which has been going, just hits all-time highs like every month, it seems. I know you have a silver stock, at least one, I think, in the turnaround letter portfolio. I won't give it away. Carl Delfeld, who I mentioned earlier, just recommended one. I think maybe a junior miner in his silver miner in his Cabot Explorer advisory. So if you're looking for some silver picks, check out those. Again, Clif runs Cabot Turnaround Letter. You can find that on the cabotwealth.com website. You mentioned healthcare stocks, you mentioned gold and silver. Any other sectors, subsectors that you really like right now, especially as turnaround plays?
I'm writing, every day when I go through the stocks looking for new turnarounds, I'm seeing stocks really across a number of sectors. I'm seeing some in, not to give them away, retail, just generally consumer retail, which you wouldn't expect right now. You would expect maybe consumer staples, but the beaten down retailers are starting to come back.
I wrote
So
about this in cat. So Cliff and I run the two value-oriented newsletters. I wrote about this a few weeks ago in Cabot Value Investor that those were looking, especially on a valuation basis, looked attractive. And there was a big disparity between, like, you would think retailers' growth would be, significantly impaired. Like you hear about that with, Nike and th big companies that are multinationals that are really exposed to tariffs. Starbucks, I know, is one of them. But uh, the earnings numbers in this last quarter, at least, were pretty good, and guidance wasn't reduced much. And yet, they're still trading at a significant discount.
absolutely. I think we're going to see more strength in the retailers heading into the summer months, and seasonally it should help. So, I mean, yeah, between retailers, healthcare, gold, and silver, I mean, those are my three primaries. I also would throw in, I think there's a good chance for oil and the oil stocks to rebound in the coming months. That's one that I've got my eye very closely on right now.
Yeah, oil prices tend to spike in the summer months. we'll see. Oil has been, where is it now? I mean, I might, every time I fill up at the pump, I really appreciate where they it's $60 a barrel right now. It's pretty low.
It is.
Down from, what was it, $80 just like a few months ago?
It was. It's come down in the last few months.
Yeah, let's see. It was $80 beginning of the year, like January. And even as recently as April, it was in the 70s. So yeah, no, that definitely, I could see a turnaround there. Um, Cliff, thanks for joining me today. And you can step in for Brad anytime. No, I'm just kidding. Uh, but again, you can read more from Cliff at Cabot Turnaround Letter on the cabotwealth.com website. Thanks everyone for joining Street Check today. We will be back next week. Actually, I think Brad is still in Europe next week. I will be back with another guest next week, and we will talk to you then.